Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more. Well, hello, good morning, and welcome everyone. It is Monday, March 3rd, and this is the AgYield War Room. I am, of course, AgYield Marketing Manager, everyone's favorite backup host, and best-looking member of the War Room, Jack Coakley, here, again, filling in for Dan. As always, feel free to join the discussion, post a comment, or email us at info@agyield.com. I was... our inbox was flooded with people who were agreeing with all of Brian's fun facts about turning old on Friday. It was great to hear everyone corroborate what he had to say. So thank you for everyone who shot us a nice message there. To get us started, let's shoot it over to Brian with some overnight numbers.
Thanks, Jack. Yeah, overnight started a little bit friendlier in the corn and beans, but as the morning hours approached, it got a little bit weak here. I think with tariff day approaching tomorrow. Going off the May contracts now off the front here. May corn at 466.5 down 3. May beans at 1022 down 3 3/4, and May wheat up 1 3/4 at 557.5. The Brazilian real, it was a little bit strong overnight, and the dollar a little bit weaker. So we'll see how that brings as we get closer to the open.
Thank you very much. To start off our conversations today, Ben, let's start with you. Just give us, where your head's at the start of the week, and then we'll throw it around the room.
Yeah, I would just say that, the markets are really vulnerable to things coming out of the current administration, not just in grains. Sunday afternoon, the president tweeted something about Bitcoin, and it rallied 7,000 points or 7,000 Bitcoins, however you quote that. And I think we've kind of gotten that in the grains with tariffs supposed to go into effect, sort of a domino effect, getting through some major moving averages, the 50-day. The May did touch its 100-day this morning and held. The liquidation has been pretty aggressive, particularly in the front end, considering that the bullish story in corn, or it's definitely not a bearish story in corn, has led to selling, the concentration of open interest there with some liquidation. And I would hope that we found some footing here over the next couple of days after heading in. We had options expiration, we had first notice day, all those things kind of, I think, ran into each other. May's been down 7 days in a row, and would think that at some point here we start to neutralize just a little bit. But who knows? These things can be tricky, and if for some reason in the next 24 hours we find out that we postpone tariffs another month, I would not want to be the guy sitting here being short after a 55-cent break.
Yeah, thanks for that, Ben. Dustin, where is your head at as we start the week?
Yeah, I think it just continues to be, a bit of a letdown to see the market go up and then straight back down again. I think one of the factors for why that could be happening is we did have a high enough insurance price to justify that we will get enough corn acres. I think that the buzz of the USDA running down 94 million acres is definitely getting a lot of people talking about that. It's like, will we have enough corn? We seem to be comfortable globally that we have enough beans. After South America's, record first season bean crop, we still have to grow a second season corn crop in Brazil. And then we still have to actually plant these 94 plus million acres that we're talking about here. But I think the market's making some assumptions about that. The other thing, though, that the Brazilian real is one thing that has been certainly, I think, an albatross in the market is the real falling back down a couple percentage points. It's, really kind of been dictating where we've gone from the lows in December or some of these back month contracts up to some of the early season strength, and then followed by more weakness again. It's almost perfectly correlating with the real. So today we're up a little bit in the real. I'd be curious to see where we finish the day, but I just don't want to lose sight of that being an overall rising tide, falling tide.
Thanks for that, Dustin. Let's shoot it over to Justin. That's always the worst transition for me because I'm like, don't say Dustin again because it'll be confusing. Justin, anything to add there?
Yeah, I would say, we liquidated in the first notice day. We've got some deliveries. The old adage, this was if you're trading pure fundamentals. If you're in a bull market, you tend to have breaks going in the first notice day. If you're in a bear market, you tend to rally in the first notice day. So it's kind of a key area for me, just looking at, how things play out here. The old adage would be if you, broke into first notice day, for example, you'd buy half on Friday and half day on the open if you're gonna try to be long, and vice versa if you're trying to be short. So, we got some deliveries. We hit the 200-day moving average in March corn. We hit 200-day moving average in D's corn overnight. So you hit all these big numbers. It's a much steeper break. We're lower on the year for a lot of these contracts. D's corn's still up about a dime on the year. So March, May, those contracts got lower for the year. Like Ben said and Dustin said, we've got a lot of moving parts here. Stock market's whipping around. You've got Ukraine deals trying to get done right now. You've got all these new cabinet members coming in and digging into things, and there's just a lot of news flying around by the minute, by the hour. So we've talked about this for a while. I think volatility is here to stay, and now we're getting into March now, and we're going to have a major report at the end of the month. You've got a lot of people talking about ton of corn acres, and I think this volatility is going to stay here. As far as where the market goes, I think we're probably at levels where D's corn got down to 452. That's a nickel away from where your floor is if you buy a 95% policy. Given if you're using your APH or average yield. So I just think the new crop contracts stay supported on breaks below here. I think we're taking too much premium out personally for what's coming our way in the new crop contracts. It makes sense to me that the old crop, these big inverses, kind of liquidated a little bit. That's where the open interest is. That's where the fund length is. But I think we're probably close time-wise to where new crop contracts decide they don't want to go down anymore.
Yeah, great stuff. Get something else there.
Yeah.
Yeah, I'm just doing that news anchor thing where you wait way longer than you need to. Make it really awkward. Anyway, any other grain-related things before we go over to livestock? Ryland, looks like you're up. What do you got?
Well, not much. It was kind of a bloodbath here on the livestock side of things. You had a big, sharp sell-off in the cattle market last week, and a new low for the move in hogs. It's just been pretty incredible to watch the hogs kind of fall, just ahead of this tariff situation. So we'll see if there's any shakeup there. I think the market's expecting those to come on tomorrow and see what the damage does. So we've been seeing managed money liquidate out of the hog side of things. We've been seeing them start to trim back their cattle position as well. And the news is at least on the cattle side, is a little bit more obviously weak. We had a weaker cash price, 197 to 198 generally for the live, and then 313 for dressed. So really looking for something to stop the bleeding. But we just hit the 100-day moving average in April cattle. I think there's going to be some concerns that we're still going to stay relatively weak if we don't see the beef market stabilize. So a lot of focus on that early this week. But yeah, on the hog side of things, we haven't seen the bottom yet from what we've seen. Hopefully we can see things turn around a little bit, kind of a mixed cash market. And overall, just all eyes are on the bellies, and bellies lost $22 on Friday. So still quite a bit of negative news here and just a lot of concern. So I feel like the risk off hasn't quite stopped yet. So we'll see if hopefully we can see some stabilization, but generally that seems to be the tone going into this week.
Again, I'm muted. God, I'm just, sorry, Dan. Dan's going to watch this recording and text me and be like, God, you were just looking sloppy today, Jack. And anyway, so hopefully I get to come back tomorrow. Anyway, thank you for tuning in today. As always, until April 1st, we're running this amazing promotion, 50% off all new AgYield clients. You can hear more about it in the outro. If you like what we're doing here, be sure to give us a like and subscribe on a like on Facebook and a subscribe on YouTube. It helps us get our show out to a larger audience. It helps us with the YouTube algorithm, get this show out to a bigger crew. So thanks again for everyone who tunes in on a daily basis, shares their tidbits with us, emails the info@agyield.com. We couldn't do it without you, and we appreciate you tuning in every day. As always, we're streaming live on X and Facebook and YouTube, 8:15 Central Time every morning, Monday to Friday. So we will see you tomorrow. Thanks again for tuning in. It's always a pleasure being here. And thanks everyone for a good show. See you guys.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.